Hi, and welcome to the deep dive into Evolution Gaming. Now let's look at the valuation. So that would mean using the P equals F times V model, where we look at fundamentals and valuations separately and then combine them to get to a good guess at the future stock price and at the total annual return from now to there. We can also look at the current situation and make a judgment call of whether the stock is, or how much the stock is overpriced or underpriced right at this moment. Just be aware that typically a stock does not change in that way to your warranted price level just because you have put it to paper. Rather, you should expect it to take at least a year and maybe even 2, 3, or 4 years before you have a normalized situation where other investors get on the same side as you and see what you are seeing. Up until then, the uncertainty is higher, both for the rest of the market, which we need to take into account, and it's higher for ourselves as well. We'll get to that in the risk assessment. So here, now let's move over to Koifin. As you can see, the Q1 numbers have not been entered in full yet into Koifin. So for that, you would need to go to the actual quarterly earnings report, which is always downloadable. However, we can see the year-on-year growth numbers, and as we can see here, the historical growth rate used to be in the 40% range. And it looked almost as if the company was getting back to that level, and that probably created some optimism in the stock, although I don't think it was actually reflected in the stock price that much. So the market must have been suspecting that something bad was happening, and then we got this last earnings report with just 3.9% sales growth. Just please note, it's not a negative growth rate, despite tough comparisons. So 1, 2, 3, 4. This is what we're comparing to, and it's a 17% growth rate for sales 4 quarters ago. And now we're still growing at 4% despite various headwinds for the company. So one thing we need to think about here is whether the company can get back to very high growth numbers in the 15 to 20% range. Could they even get back to a 40% growth rate? I would doubt it, but that's something of a judgment call later. Or is this actually a shrinking company? Have we seen peak revenues for Evolution? I mean, there is political risk among gambling, and possibly they have become so big that they can't grow anymore. Or will this just settle down and grow with the general economy, becoming a bit of an average stock market stock, and thus warranting the average stock market valuation of maybe around 16.5 times backward-looking earnings at any point in time. We can also look at the EBITDA margin, and as you can see, they climbed consistently here for many years, reached a level of 70%, kept that and even increased it to over 70% for a couple of quarters, and now they're down to 65.65%. So where is this one going? We can also look at the net income margin. There's the same pattern again. And as you can see, even the most recent net income margin of 49% is a very, very high margin. It's one of the highest you would ever see among large companies. Just keep in mind, however, that the market cap of Evolution is just about 20 billion euros. So this is nowhere near the behemoths with 200 billion plus or even 2 trillion plus in market cap. This is just a 20 billion euro market cap company. So there is absolutely room to grow. They are nowhere near to exhaust a conceivable wallet share of the economy. But as you can see, it was a bit of a down quarter. Quite a lot, quite a big disappointment. The question for us now is this the bottom, 49%? Will we get a little bit back upward again, or has the environment for and the potential for evolution, has it changed permanently for the worse? So let's leave it at that, and then we'll look at a price earnings ratio here. Backward looking is this, and we're at just 10.4 times backward looking earnings, coming from a ludicrous peak of 100 times, and some kind of an average here around 25, maybe 25, 30 actually, and around 25, 30 times, let's say 31 times earnings or 33 times earnings. That's twice the market average, and that's what you should get if you're growing profits by, let's say, 16% rather than 8%. Give or take, that's not an exact science, but anyway, if they were to get back to anywhere near their previous growth rates and margins, you would see both a temporary upkick in profits and higher multiples on top of that. So there should be several dimensions of potential built into this low share price. So here's another way to look at it. This is the total revenues. It doesn't look like this is a company in trouble. The last reported number would be here, 521. So the only thing that stands out are these 2 quarters. Otherwise, this is still a growth company. The miss was a 4% miss. The expected revenue was 544 million euros. So just a 4% miss, but a 20% drop in the stock price. Here are the quarterly growth numbers. Here are the profits, also lacking 1 bar here because of the closeness in time to the actual reports. They hadn't had time to update it. The EBITDA of 342 million euros was a 6% miss, which is typical. They always have a bit of an operational leverage and they are gearing towards growth. But still a 6% miss and a 20% drop in valuation. That's pretty extreme. And in terms of diluted earnings per share, it was down 3% year on year. And the last 12 months rolling numbers were basically flat from 594 to 591 euros per share. What we want to think about here is one, how fast will they grow, and we'll actually come to that in the next segment, and what will the valuation multiples be then based on that new growth and profitability regime. So just to get a couple of quick examples, if they trade at the market multiple, 16.5 times, and they keep their current level, then that implies 97.5 euro or 1,070 kroner per share price. So this is just if they are an average stock going forward from the last 12 months. What if they permanently stay at 10 times? Well, then this is the correct level. Then they are just fairly priced. But what if they get back to 20 times? Well, then we have 100% upside right now, and we probably have growth as well going forward.